With tensions turning into full-scale conflict in the Middle East, combined with continuing action between Russia and the Ukraine in their region, several years on at this point, investors are asking questions about current markets and geopolitical events and what that means. So we'll cover that in just a second. It probably is helpful to take an aside and say our topic here really is the markets themselves, and in no way are we trying to minimize or gloss over the real story here, which is the humanitarian side and what's happening to the people on the ground in all of these various regions of the world. So certainly not minimizing that. We're just focusing here on what to do as investors and what that means for the capital markets. So as we move back to that topic, we'll throw a chart up here on the screen that shows various geopolitical events throughout time since the end of World War II. And this is by no means an exhaustive list. So not on this list are things like the Cuban Missile Crisis, even 9/11, but there are tons of events on here. And what you see is a blue chart that largely grows up and to the right, meaning returns have been positive over time. You do see blips and settling returns throughout times where these conflicts have caused some concern on the short-term basis. But largely it hasn't disrupted the markets and benefited you to be long-term in your perspective, as we've covered from a lot of different perspectives. A couple of notes here. First of all, this chart is done on what's called a log scale, which essentially just takes really long periods of time and helps to put them in a way that allows you to see those fluctuations. So it would be really easy just to use a growth of $1, and what you'd see is this giant hockey stick, and it would kind of run over all the nuanced declines throughout some of these events. So that's why we've used that kind of chart. You're welcome to use your favorite AI chatbot and learn more about it if you're interested. But it does show the nuanced declines during some of these events. So we're not trying to say it never happens, but really is how long does it last and what persists. So the important points here are, absent conflicts that turn into super regional and true global conflicts like a world war, and we haven't had one since the end of World War II, gratefully, there isn't typically a massive, large disruption to the economy and resulting in markets. The second point is, when we do see that, it is typically involved conflicts in the Middle East because of the supply of energy that comes from that region of the world. So that's the kind of the question at the heart of everything that we're looking at right now. Would a normal conflict of this size cause economic disruption? Probably not, unless it turned into something considerably larger. But any sort of disruption or perceived disruption to either the supply or the transmission of energy from oil to natural gas, and we've seen impacts to both in the past week, that's what we should be focused on. That is what has the attention of investors. Does it push inflation up? Does it create costs that end up causing issues for consumers or companies that causes an economic disruption? So those are the things that we're focused on. Maybe a couple of bits of good news. Here in the US, probably we're the best positioned we've been maybe ever to be the marginal producer, at least on a smaller scale. Not that we can be the world's energy source, but certainly if there are disruptions to US supply, with marginal production prices kind of in the $50 to $60 range. If we see prices today in the 80s and they head to the 90s or 100, it becomes very economical for those companies to help maybe supply and fill the gap here. You are seeing gas disruption, and that's a big source of energy for Europe. Headed into warmer times probably helps us a little bit in that regard, but that's something to watch as well. Maybe the largest disruption is the typical energy flows that normally head to China. And so they're one of the largest consumers of energy in the world at this point and growing rapidly. So disruptions there could cause problems economically in China. So we don't expect this to be an even impact across the world. And I think those are the things to watch. So let's watch that uneven impact, and let's watch the persistence of these price changes. So do prices go up and stay there? Do they come back down? And how long are the disruptions to supply? So those are going to be the keys, in our opinion, to whether or not the current disruption turns into something economic, which is something that would impact capital markets. So with that, we'll pause and we'll come back when we see more. Thank you.